Hello, traders. Gary Wagner with the Gold Forecast here. It is the second day of February, Tuesday, about 10 a.m. in Honolulu, Hawaii, and this is the Daily Report. Gold is currently trading off $4 to $5, trading at 1333, 1344. We are currently looking at a candlestick chart in terms of the duration. It is a 30-minute candlestick chart. Each candle represents a half hour in time. So what we are looking at right now is the fact that we had that really strong rally yesterday. That's right in here. Of course, the market kind of traded sideways for a while, and in the evening session and right after, it did come down, but it does appear, at least on a tentative basis, if we look, we have this series of bottoms here, which tells me that in terms of absolute interim support, short-term support, this is that area that I feel comfortable in which it is, in fact, finding some support. Traders, we're going to move the time sequence and kind of compress it a little bit. Spot gold again, candlestick chart again, although each candle right now represents about 240 minutes, so that it is something that gives us a little bit more information than our daily chart. One of the reasons that I actually like this chart, that triple top that we had recently back last year seems to really prominently get displayed on this type of a what we call an intraday chart, but because the time cycle is so long, it's really you're just breaking up your daily into a number of bars as opposed to a single bar. You can see the various bottoms also, and this is at 1310. This is where my belief was that we found some interim support, and my belief is also that this is probably, and again, we'll have to see how this pans out, but this is probably the beginning of that B wave, meaning that we're going to have an uptrend wave, but it's my belief that this uptrend wave is actually going against the current trend because we're in a corrective phase. So in a corrective phase, the current trend is down, so that this up wave is kind of swimming against that tide. For that reason, we want to play this particular trade very close to the chest, because I'm still, until we get strong technical evidence that the correction has ended, I still think that we've got to look to possibly sell rallies. We will buy the dips, but we want to play both of these close to the edge. The good news is that once we're out of this corrective phase and go back into the impulse phase, we're going to have a series of 5 really nice waves to work with. 3 of those impulse waves are going to be strong waves to the upside. Now, from the 240-day candlestick chart, we're now moving into our daily candlestick chart. As you can see, today's activity, very quiet. It is a down day. It is a black candle. It is forming a narrow band right in here, so we are certainly trading within a very tight trading range since that breakout, as you can see right in here. And so we're right within that trading range. The one thing that I do see, and something that is quite apparent to me when we look at this one area, we talked about the support based upon Fibonacci, but we can also kind of see this double bottom here. You've got tentative support in these areas, and at least at this point, I think that that's going to hold. I think that that's going to be strong. Again, what I'm typically looking for in a marketplace like this, and we'll go to the wave count to do this a little bit in more detail, but we're hoping to catch our B wave up here. We're looking for our B wave. In terms of our target, the target is going to be somewhere between 1365 and 1396, somewhere in that area. This particular area right in here is going to be that target. Now, how will we know? First of all, if we're fortunate enough to see the market move in the direction we're anticipating, first. Secondly, as it moves up, what will give us our indications that we are at the top and we should look to pull profits and make decisions whether we want to sell the rallies or let the market ride down? It's going to be really based on A, the Fibonacci retracements, because in these areas we will look for signs in terms of candlestick patterns that give us those reversal indicators. So we always use our double techniques to kind of filter our calls and to give us some solid indication of where we think the market is moving. And the last chart I do want to take a look at today is going to be our average chart, Japanese average chart. Time sequence on that is a daily chart. And this is, as you're probably aware, this is the chart that we use for our master Elliott wave count. And the one thing that I am noticing on the Henkin chart, let me go ahead and blow that up for us, traders, is that as you see it moving within that channel, this channel line I just drew in, but you can see that these characters over the last couple of days have been small, but they have gone green. And you can see that as a trend will pick up in pace, if we look at this particular area here, as it picks up pace, it has that period of consolidation in which it kind of gathers steam in anticipation of a directional move. Now, you can see that there is a slight tacked up, but again, it's much too early to tell. What are we looking at more long term? Well, today's discussion is really going to be our interim term, but as you can see from this chart, my belief, if we've got this count properly done, and I truly believe that we have, we'll see this market either clip up here or we'll see this market clip to, as I said, that somewhere between the 50 and the 75% level, and it could be a steeper angle than that. And in terms of a correction, and we'll have to see, if it's going to maintain this bullish stance, it will stay somewhere within this channel line, so that the most bullish stance, of course, would only take it to this first line, and a less bullish but still extremely bullish long term would take us here. And if we follow that line over, you can see that that is just below above 1300, but still maintaining a bullish stance. Once that happens, of course, my belief is we're going to go into our our impulse wave. And as we all know, our impulse wave is going to be composed of 5 waves, 3 strong impulse waves to the upside, 2 corrective waves, 2 and 4 to the downside. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily report. Bye-bye.